How's it going, everyone? It's Sam. I want to make this quick video because the market is pumping, and I made a video earlier today talking about the next move for Bitcoin and for cryptocurrencies and how it could be a massive pump. Now we're starting to move up just a few hours after that, but I noticed not too many people saw that. Maybe it was the thumbnail, maybe it was the title, maybe it wasn't catchy enough or clickbaity enough. But we're going to cover why the market's moving right now because Jerome Powell did speak, and I think he really calmed the market's fears. I mean, heck, Microsoft is up 4% today. The whole market's rallying, and crypto is doing well as well. We also have a couple other things to talk about in crypto that I didn't cover in the earlier video today, but I'm going to try to keep it nice and short because I am going to see my new nephew that was just born a few days ago, and I'm going to see him for the first time, so I need to keep this really short here. But as you can see, the market is rallying here. Bitcoin's up 1% in the last 24 hours, but it's up to 23,200. A lot of life being brought back into crypto, and some cryptos are up like an extreme amount. The graph is up 70% in the last 24 hours. Singularity Net is up 27%. Fetch AI up 20%. And we talked about that with some of those AI tokens earlier today. The DXY is starting to fall as well. We had another big green candle earlier in the day, and now we're starting to fall back down. Bitcoin is making a nice move, like I said, from about 22,700 up to 23,200. Now, this is also affecting the stock market. I mean, let's refresh here. Up 4.6%. Microsoft, a $2 trillion company again. Crazy how much this thing is moving and how much the whole market's moving. And it's for a couple different reasons. The main one, though, is Powell. Powell spoke today, and his interview basically confirmed that the January jobs numbers that came out last week Friday didn't produce any new signal for the Fed. This is exactly what I've been saying since that report, that these were overblown, that people thought that this would change how the Fed viewed the economy, but they said last week that they weren't really concerned with having the jobs reports coming in too high or seeing unemployment too low. They didn't care about that. It's more about bringing inflation down. And if they want to hit that soft landing that they continue to talk about, then they need jobs to still be very strong. They still need a strong labor market. They said that they saw the data as confirming their perception that disinflation has barely begun. Part of that could be because we still have such a strong labor market. Powell had the opportunity to walk back his comments on tightening financial conditions just a few days after he mentioned it, especially because that sparked such a big rally. If you remember last week, we had massive moves after he spoke, and he didn't walk back his comments. He wasn't challenged on it, despite the really good data coming out Friday. This has been viewed as a license to pile into risk assets. And then last thing, we expect 2023 to be a year of significant declines in inflation. The process of getting inflation down has begun. So really, this market rally is just because of what Jerome Powell said. He thinks that the market is, he thinks that inflation is coming down. He thinks that they're going to continue to raise rates. He said that, basically saying the same thing that he said before, telegraphing exactly what they want to do. And part of it is because the treasuries have gone up. Since that report came out, the 2-year and the 10-year treasuries spiked up. We've covered that. And because they spiked up, financial conditions have gotten tighter or more difficult for risk assets, and that pretty much did his job for him. If people are less likely to invest in risk assets and let this kind of pump continue, well, then that does his job for him, and he doesn't have to continue to raise rates as much. So that basically just helps him out. Now, we did get some news. Crypto commercials are banned from Super Bowl ads, and that's the title of this. I don't think that they're really banned for the long term, but they do say, according to the New York Post, that some companies tried to get Super Bowl ads and they basically were shut down because of what happened to FTX. I think that makes sense. I mean, even the NFL, I think long term they'll bring back crypto companies, and I think that makes sense. But even they are a little bit cautious. I mean, there's basically like a cleansing. No one wants to touch crypto, which is probably a good sign that this was the bottom, or we're close to the bottom if we haven't already hit it. We talked about Microsoft earlier today announcing something around 2 p.m. Eastern time, and basically they announced what we expected. They're going to integrate OpenAI into search, into Bing. So if I was Google, I'd be a little bit worried now, but they also unveiled their own product. And then last thing I really want to cover before hitting on a couple points at the end, I talked about DCG earlier today. Gemini has reached an agreement with them. It sounds like it might be around 80 cents on the dollar, but it's uncertain at this time for sure. However, one thing we have to pay attention to is the fact that DCG is selling some of their ETH. Now, they're not selling GBTC at this point, but they did sell about $22 million of ETH, which isn't a ton, but it's still something to pay attention to. We just need to make sure that they don't just go and start dumping some of the crypto on the market. Now, like I said earlier in the morning in my last video, which I'll put on the end screen here because there's a lot of good stuff in that, I think we could get ready for another rally. And that's exactly what I said today. And now we're starting to move. I think a lot of it depends on CPI next week, but we are set up pretty well. And I think there is a lot of momentum in the market still. Everything seems to be gearing up for a soft landing, which is why I've been dollar cost averaging and continuing to buy strong assets over the last year, even over the last couple months when everything looked really dark. I've still been buying because I think this is a good time to get ready for the next bull run. Now, with crypto, it's a little bit different than stocks for me. I will be making a video of some of the top cryptos to buy in February. I should have already done that, but I'll be doing that in the next few days. Some of the ones that I've been looking at, one of the ones I announced last month, it's actually up about 200% since I made that video. Don't want to pat myself too much on the back because a lot of cryptos are up, but I'll be doing that here soon. With crypto, I've been sitting a little bit just waiting to see what happens next. Now, the longer we trend sideways, I think the more bullish it is. I might start dollar cost averaging a little bit again, but I dollar cost so much that when we start to pump back over 20,000 so aggressively, we went from like 18,000 to 23,000 in I think like a week. I just sat on my hands for a little bit, but with some of the stocks that I've been buying, I just think they're still at a really good value. I mean, I was buying Tesla at 101, loading up, and now it's 190. I still think there are a lot of other good opportunities for the long term, and that is a little bit less risky. And I'm just excited at this point. I'm not trying to get too excited. I'm trying to keep my head clear, which I think we all should do, but the market seems to be turning. Jerome Powell seems to be turning more dovish. That's what we've been waiting for. It looks like there's an opportunity for a soft landing, and that's what I've been saying for months here on the channel, that we can take jobs reports, really strong labor conditions or tight job markets as a negative because that's what the market's doing right now. But in the best case scenario, which is the soft landing, that's what we need. If we want to have the markets really race up, we need that data to come in and to keep coming in with CPI coming down. And that will be the most bullish scenario possible. Let me know your thoughts on that underneath the video. Let me know if you think this rally is going to sustain. Obviously, crypto's tied to stock. So if we see a pretty red day tomorrow in the market for some reason, crypto might fall right back down to where it was. But at this point, it seems like the market's pretty excited with Jerome Powell and pretty much is shrugging off the worry of last Friday. Let me know your thoughts, though, underneath the video. Thank you so much for watching. Check out the links to Margex in case you want to make leverage moves, leveraged buys and shorts, longs and shorts. You can check out the link underneath the video. There are also links down there to Webull.